Hello, everybody, and welcome to the IX Trading Room Live with me, Richard Perry, every Wednesday at 4 p.m. UK time. What are we going to do today? Well, first of all, I'm going to talk about the disclaimer. Thing we need to understand is I am talking about live market information, so please don't take that as investment advice. It's not in any way meant to be investment advice. It's just for your informational purposes only. Is that light good or not? I'm not sure. I might turn that off. But yeah, so just remember that everything I talk about today is not to be intended as investment advice, basically, just for you to take away with you, just to find hopefully interesting, so that you can have a thought about what you're doing. So yeah, disclaimer. Right, now that's out of the way. I said to you in the Instagram video that I just posted that we're going to be talking about a few things today. I've got my list here. I'm going to be talking about, first of all, the PMI data and the ISM numbers. We had a bit of volatility actually today, because what we've seen is that the Chinese PMIs came out very positively this morning. Risk appetite went higher, positive, all good. However, since then, we've seen the ISM data for the US, the PMIs for the official PMI data for the United States. That's come out a little bit disappointing. So what that has done is we've seen that risk appetite just fallen down a little bit. But I'm going to show you the implications of all those PMI data, look at what they mean, and see how they are affecting markets. I'm then going to go on to talk about the Eurozone inflation numbers, which are tomorrow. A little bit of a look at risk appetite in the US dollar, and then finally look at precious metals and the potential trade here. Because basically what I'm doing is I'm looking at everything on this IX1 trading platform. This is the platform that INFINOX have just recently released for its clients, and we think it's very good. I've looked at this platform. I think it's a very good platform, and I think it's something that is a very good USP for USP for clients to be trading on. So subsequently, I'm going to be talking about the platform here, which is, as you can see on your screens. So first of all, the PMI data. So as I said, Chinese PMIs came out this morning very positively, very, very strong actually. I'll show you what they were. Chinese PMIs, here we see the Chinese PMIs, very strong. You can see all these lines spiked higher, and these lines, certainly the manufacturing, the yellow one and the pink one, multi-year highs, and that suggests that China is reopening hard from its zero COVID phase, and that's a positive. That means positive for risk appetite, positive for commodities, positive for exporters, countries that export into China, everything. So that's good. So what we have seen today is, if I get the board up, now this is not the IX1 platform, but just to give you a quick glance at what boards are doing. Australian dollar positive, New Zealand dollar positive, and that's good. Also up here, the euro positive as well. Gold up, silver up, oil up. All these things are positive, and you can see that comes through on the IX1 board here as well. All my instruments that I've got set up here. So that's all good. And what does that mean? Well, it means that there has been a bit of a turnaround in markets today. And the question is this a sustainable turnaround? I think it could be something that we're now looking at, because if you look here on euro dollar, forget that euro dollar and put it full screen, you can see that euro dollar has just turned a corner near term. It picked up on Monday into the close, and then it's strongly higher again today. And this has ended a run, it's certainly broken the downtrend, and it now is testing key levels on euro dollar. And we can also see that, if I just exit full screen, we can see that that is also the case on Australian dollar as well. We can see Australian dollar has picked up. Sterling dollar struggled a little bit and just actually has fallen over a little bit this afternoon, interestingly enough. But generally speaking, some of the risk positive currency pairs are picking up, and you also see the New Zealand dollar as well picking up nicely. So there's been a bit of a turnaround, but that turnaround has been questioned this afternoon because at 3 o'clock we've seen that the ISM data for the United States PMIs have come out disappointingly. Now those PMIs disappointing, but not entirely. If you look at you look at Thursday, Wednesday. Oh no, it's reset itself. Tuesday, so custom. So I just need to reset my calendar. Tuesday to Friday, July. So you can see here, if I scroll down to today, you can see here the US PMIs came out, and it was only a slight increase, 47.7. But look at this, manufacturing prices paid jumped to 51. Now, that's inflationary, really. So you're having a contractionary PMI, which is below 50, and an inflationary PMI, prices paid, prices going up, and in a bit of a contraction in the activity. So that's not all that great. So what we have seen this afternoon is that US indices, let's just say S&P futures, for example, have just fallen over, and they're now trading at day lows and looking to break down. These look to be as though they're in correction at the moment, and that is the risk that we're seeing at the moment, is that US PMIs are a drag on US indices, and we can see that coming through this afternoon. We can also see that in NASDAQ as well, pulling lower on the NASDAQ. So there's a bit of a sort of a combination, or a dichotomy, really, I should say, of the Chinese PMIs being positive and US PMIs being not so positive, and we can see this sort of being a sort of a diametric effect on certain risk appetite aspects. So you've got currencies moving higher, but the equity markets are moving lower on Wall Street, and that's a bit of an issue, I suppose you'd argue. But question is this going to be continuing? Well, it certainly looks as though that US equity markets are falling over, continuing to move lower, and that is obviously not positive for the US. But if you look at sort of Eurozone currencies, that could be now starting to move higher. So that sort of leads me into Eurozone inflation data tomorrow. We've had inflation for the Eurozone countries out in the last couple of days. France, Germany, Spain, all coming in higher than expected. And that sort of leads us to think that maybe you're going to get a hot Eurozone inflation print tomorrow. So we're going to go back onto our calendar. See here the calendar, and we've got Thursday for the Eurozone inflation, and it's expected to increase year on year to it's expected to sort of fall to 8.2%. I think that's I think you're unlikely to see that, actually, considering all these headline numbers have come in above expectations on these big Eurozone economies: Germany, France, Spain. Headline inflation staying the same. If headline inflation increases, I mean, that you're nailed on for 50 basis points of rate hike for the ECB. But the question mark would be then, what happens beyond that? Does then have further rate hikes? And that sort of leads me to think that the euro could come out quite strongly from that. Sorry, wrong button. Euros could come out quite strongly from that. And we could see euro sort of moving nicely higher. So that is a very real possibility tomorrow. But volatility on the euro's pairs tomorrow, certainly. And if it continues and there's an upside surprise in Eurozone inflation, we could see euro dollar moving higher. Certainly, euro against the likes of sterling. So something like euro sterling, something I talked about, I think, last week, moving higher. And look at euro sterling, decisively higher today, rebounding hard. We could see it back towards the 90 level again, if that is the case. Now, one thing I was going to talk about today was the dollar. Now, dollar index has just rolled over a little bit, and that dollar index has rolled over as risk appetite came out positively this morning, and that sort of weighed on the dollar. However, what we've seen this afternoon is that US Treasury yields are moving higher. This is the 10-year. The 2-year has moved to above where it was in November, above that 4.88% mark. So this all sort of points towards, and that has come since that ISM data, by the way, that since those prices paid ISM data showed inflationary pressures once more building. Treasury yields moving higher. So you've got the dollar that's just sort of fallen over a little bit, but picked up. Excuse me. Sorry. But the dollar has picked up a little bit since that ISM data has come out because of those higher treasury yields. So this is the question: does the dollar sort of fall back, or does it find support and continue to rally? I think it's in a really important sort of inflection point where it could start to fall over, because you've got the resistance coming in at 105.63, 105.35 the last couple of days. 105.35 the last couple of days. That 105.63 was that January high. But equally, this old resistance could become new support. These old breakout levels between 103.40, 104.65 that the market has pushed through in the last week or so. This now becomes old resistance becomes new support. So how the market reacts around this sort of area is going to be very important, and it's something that I will be certainly keeping an eye on. So the question is, does the dollar now pull lower? Well, that euro dollar chart looks like it could do, but let's have a quick look at cable. That doesn't look as though the cable is going to be sort of pulling higher anytime. So that dollar is still in a strengthening trend, still sort of pulling cable back towards the sort of 118s, 119s. Dollar yen is still moving higher. Doesn't look as though it's going to be moving lower anytime soon. Let's get that crosshair on dollar yen. Breakout above 135, holding a breakout above 135. If it moves below 134, then dollar yen may be starting to correct. Maybe then the dollar starts to correct. But at the moment, dollar yen is holding up. So it's only really euro dollar. Okay, let's just have a quick look at Aussie dollar. Aussie dollar needs to do a lot more to suggest that it's going to be rallying, and it's sort of back off the highs now. So yeah, there's a lot more, I would say, that we need to see from these forex charts to suggest that the dollar is correcting. So not yet. However, one thing I was going to talk about today was that I'm going to show you a chart now that I find is really interesting. Not this one, although this one does sort of look as though some of these currencies are starting to recover a little bit. But as I said, those dollar pairs do not necessarily look as though they're corrected. I wanted to show you this chart here, which is the precious metals. Precious metals have picked up actually in the last few sessions. You can see the gold price sort of starting to turn around again, platinum basing out, and also silver picking up. That's the performance over the 3-month period. Look at palladium. Palladium is terrible, nowhere near the performance of the other three. So what we see is gold. I'm going to show you my gold chart here. gold is starting to pick up. Let me just pull this a little bit better there. Gold is starting to pick up, and yesterday's candle was a bullish engulfing candle, which is a reaction from which is a decline to a new low and then a close above the previous session high. That's a turnaround candle. We've seen that continuing today. So that is a move that I think is very interesting. That is suggesting that there's potential for a turnaround play here. We can also see this potential for a turnaround play in the silver chart. Again, bullish engulfing candle yesterday. Rebound, and we're seeing actually a positive move, actually a buy signal on the RSI. Now let's have a look at some of the under indicators. Silver, not quite yet. If those MACD lines start to cross over, then that would be a buy signal. Bollinger Bands, you picked up from the lower Bollinger Band, a little bit of a crossover on the stochastics as well, so that's a bit of a positive there. But finally, look at this, the parabolic SARs. Now, the parabolic SARs have turned a corner. So you're starting to get some turnaround signals, possible rallying signals on these, both gold and silver. There are a couple of possible trades to look out for here on these charts. I said that I did say that platinum had based out. Now this is the platinum chart. You can see here. Oh, sorry. Let's do it on the. Yeah, here we see that this sort of basing out of the platinum chart needs to close above that candle there, which is 963. Close above 963 on platinum. That is a base pattern, and you'd also see the RSI back above that 50 mark. Again, a couple of positive signals starting to come through. So platinum trading above 963 on a closing basis, that's a base pattern. Also, as I said, on gold, if I zoom in a little bit, you can see here, gold moves above this reaction high here, crosshair, which is 1847. It moves above 1847 towards 1850. I think that again is a sort of basing area that you could see on that gold chart. So again, another possible turnaround. And silver is again another one to look out for. Silver hit that 2117 mark yesterday, today, which was the reaction low that we saw a couple of weeks ago. That's resistance, and it has pulled back low. If it moves above that, so 2120 area, so for example, certainly on a closing basis, again, that would be a turnaround. So there is the possibility for, say, for example, if gold closes above 1850, I think that is a bullish signal. And it leaves me with the potential to do a little bit of a trade on gold, which I could do just to demonstrate the platform. So you look at trading gold here. So you have gold, and then I'm going to do a stop order, which is a buy stop order. So I want gold to move above a certain level, to hit a certain level where the order gets triggered, and then continue to move higher. So that would be at 1850. I'd have a stop below yesterday's reaction low, and that stop below the reaction low yesterday would be not a pips stop, it'd be a price stop of 17.99. So that's 50. So you can see here the levels are coming in now. And again, take profit. I think that could then, if it does start to move higher, you could see the potential for it to start to rally quite strongly. So again, price possibility of 1960. Now, the issue I've got here is the lot size, the traded lot size. Wow, I mean, one lot on gold is $100 per $1 move on gold. That's ridiculous. So half a lot is $50, still way too big. I'm going to actually have one micro lot, which is $1 move on gold, is $1 move on my account. Now, it all depends on the trading size of the account, but that I think is for the trade size that I've got in terms of the stop loss, which I'm looking at $50 stop loss. You can see here, stop loss $50, take profit target of $110 at this level at 0.01 lots. So that's, again, $1 move on gold equates to $1 move on my account. And that is for, say, for example, $1,000 account. That is still the 5% of the account. However, that is sort of more within the realms of what I'm looking out for. So I'm happy with that. So I'm going to place that trade. And what we can see here, that hasn't been filled because that is a pending order. So you go to pending orders, see that pending order here down the bottom, been filled but not yet. So it's been placed but not yet filled. So that is a possible trade. Only gets filled if the price rallies through that resistance of 1847, and then I've opened it I'll put a trade at 1850. So it gives a little bit of room just in case there's a bit of a false break. So there you go. That is demonstrating the platform there on gold. So basically what we have, as I said, is the PMIs have been a bit mixed today. Chinese PMIs were risk positive, but the US PMIs were negative and inflationary. So that's not great necessarily for risk. So a bit of a balancing factor there. Eurozone inflation tomorrow, watch out for that. Possible upside surprises there. Also looking out for this potential for precious metals to continue to rally. Few things there to look out for in trading. So there you go. So I wish you good luck in your trading. Thank you very much for joining me today. A little bit of an overrun today, but not too bad. But I wish you good luck, and I will speak to you all again next week when we will be doing it all over again. So what I'm going to leave you with now is to leave you with a nice video, basically showing you what we have on the IX platform. And I wish you good luck in your trading, and I will speak to you next time.